Hello, Warriors. Everyone doing all right? Join me. Happy birthday to you. Happy birthday to you. Happy birthday, Steve Volge. Happy birthday to you, Mr. Confirmation. I hope it's a great year for you,
Thanks,
buddy.
Dale.
Yeah, I hope
Thank you,
it's a
Dale.
great year in all ways.
Appreciate
You're
it.
you're welcome, brother.
Uh, aren't you also
What? Health? Yeah.
one of
Great
these
year?
days? Isn't it your birthday as well? I think we're
Uh,
close, aren't we?
yeah, I had mine. Are you a Gemini too?
That's what they tell me. I don't believe
Okay.
in
No
signs, but
wonder.
yeah,
Yeah, no
yeah.
wonder. See, we're both schizophrenic. All right. I knew we have a lot in common, Steve. So anyway, anyway, let's get ready for the numbers. And I
Oh
hope you
yeah.
have a great day, buddy. All
Same to
right.
you, my friend. Same to you.
Thank you. So everyone, wild stuff going on. It's like the Wild West. So Euro has gotten to targets. 1650 up there. The dollar has finally taken out the April low. I'm tempted, besides covering longs, to reverse. I haven't done that yet. Here we go. So there's the euro. Approaching these targets. Let me go to the daily and show you why I'm thinking about the dollar. Um, because on the daily you have some pretty glaring divergence. You have it on euro. You don't have it on the intraday any of this. So may have to do some work. Same thing in Dixie. You know, look at this. Pretty glaring. Now, the lower objectives that a lot of us are talking about, 96 before it finishes, 120 euro, stuff like that. I think we're completing something and we're going to get a pretty good correction starting from here before we get to 96 or 95. So there's going to be one detour is what I'm looking for. Um, as far as the Dixie, maybe even a rally back to here,
Yeah,
102.
Jim Welsh is looking for something like that too. He's been looking for some big reversal down here, and I thought it would be once we reach for that 96, but it's hard to say, right?
Yeah, I just think we have to shake out some of the one-sidedness in the dollar, just like we've squeezed a lot of the one-sidedness in crude. I was lucky, I guessed. I got out of a lot of stuff yesterday. Buy dips, okay? I mean, I saw a count where we could get an X wave of pullback. I don't think this is it. So you're getting a pretty good dip today, but maybe the next couple days, maybe we even test the breakout. We never tested it here, but if I see 63, 64, I'm going to recommit because I think we have higher levels to go in energy. And how about that? The S&Ps are fading. Um, there's we already talked about the strength in the MAGA. Even though Netflix came back pretty good yesterday, it still looks pretty heavy to me. Google, I think, is topping up here. This resistance, Nvidia, I think, is topping for pullback. Just pullback. So, a lot of people said we needed new highs in the S&Ps before we get a correction. Maybe uh, I'm wrong, and we have to do that. But I don't know. I wouldn't be long a lot of this stuff. Apple's still way underperforming. Amazon looks like it's going to correct. Everything got back to resistance in this stuff, and even Bitcoin rejected from 110. Looking for under 100. So that's where I'm at. I see, Kay, you're here from wherever you traveled to.
Hi, Dale. Happy birthday, Steve. Good morning, everybody.
Yeah, so what do you think? Dollar in a capitulation phase here?
Capitulation is a big word. But yes, euro especially is doing very well. Combination of factors. The inflation scare that some didn't materialize in the US. Then the ECB on pause. The ECB members actually pretty happy with the inflows that's seen in the eurozone, and that is putting a serious bid under the euro. And not only euro dollar, but all the euro crosses are higher as well,
Yeah, look at
and
that.
that testifies of all those inflows. So yeah, I think that 117 and a half potentially in the euro dollar coming. And
Okay,
yeah, the pound has clearly
really?
lost some of its shine. um, just before leaving, I was saying like, oh, maybe the pound not looking that exceptional anymore. And then, yeah, euro sterling rallied. What is it? 1.5%, pretty easily.
Yeah, that falling wedge was a great signal.
Hmm.
And one of the things I talked about when I was getting long there is, and I thought we'd make more progress, more towards 86, and we still can. But the point being that Euro's making new recovery highs far away
Hmm.
from the high of EG.
Hmm.
So to me, that's a little bit of a background negative on Euro, that we're not up here and that we're just correcting
Um,
this decline.
yeah, but that's probably still there. I mean, people need to learn how to buy euros. We haven't been long euros for years, have we? Like apart from the occasional spikes, but now I think that it's different, a bit of a different era, and we need to learn again. The market needs to learn again to buy euros, and that's maybe why it's not like going in a straight line or exponentially higher. But it's a decent move, from 84 the figure-ish up to 85, nearly 85 and a half. It's a decent move in euro sterling.
Yeah. Well, I think that our community has learned to buy euros because we've all been pretty bullish a dollar for quite some time, dating
Mm.
back to 102. So all you have to do is click your mouse on the euro symbol, bid and offer, and then click it, and that's how you buy it. So not that complicated.
No.
Anyway, Ryan's around. Ryan, what do you think, man, about what's happening here?
Yeah,
Got
a bit
through
of a
your
crazy
one,
day.
yeah, got through your 115 area with authority.
Yeah,
What's
perfect
next?
technical break. If you look at that on a 15-minute chart, you'll see it broke and then held straight after, and then held a couple of hours after that. So as far as breaks go, absolutely perfect. There you go. Yeah,
Yeah, see it.
exactly that. So yeah, very perfect break.
What levels do you have above it?
I know Blake's got stuff from here 116, 116.50. My
Yeah.
next levels are 117, 119. Then we get into some real big historical stuff. I mentioned I wouldn't be surprised if we start hearing about some barrier action around these big figures as we go up to 120. If there was if there was a barrier at 116, that didn't last long. Yeah, so we expect to hear that. But we are getting up to some really big levels.
Okay. View on yen, not making new lows, US dollar yen with the dollar, unlike Canada and others. Yen showing relative strength.
Yeah, probably a bit of a drag from euro yen, I should think. This one's caught in the cross winds of that, and obviously yields as well. Where I'm watching that closely. We're following them pretty closely as well. Still, for as long as that lasts. So what happens in US 10-year yields is being reflected in what's happening in dollar yen. 142 is my big level, as it was before. If we get down that far, but we do have some smaller levels in the way on the way down there.
Okay, so I know a lot of you guys were short Canada How far away from target are you?
I still am.
Okay.
But
Target?
I covered half of it because it's slowed down due to exactly those euro cross beats. But I still am for as long as we're like below 137 and a half ish.
Yeah.
I'm still gonna try and be short. I think it's been a decent break, and but yeah, I know there's something really down there around 136, 135 three quarters, but
Yeah.
if we don't recover 137 and a half relatively quickly, I think we're on our way to 134.
Yeah. 134. Yeah. I think there's a detour, pretty good pop before 34, but I think 580 up and then we'll go. But just a guess. Um, any other things top of mind? We have a little sell off in risk. Maybe I'll go to Blake on this. S&Ps are, under some pressure here. What are you thinking here, Blake?
Well, I was talking with Chris Weston last night. Last night's our trade-off show. We record on Wednesday nights, and Wednesday nights for us, Thursday in Australia. And we I mean the argument that we had, or not argument, the discussion that we had is this market's just priced for perfection. I mean, with all these, China headlines and strides that we're making with the China US the trade situation, the jobs report, we had a great jobs report. You had really weak CPI. And I know Ryan might jump in and argue and say that it wasn't that weak, but it missed on pretty much every metric that the market was looking at. That should have, that suggests the Fed doesn't need to continue to hike rates, and they could theoretically lower rates if they need to. And none of that has allowed for the S&P to break out into new highs. So instead, we're in this wedge pattern that that looks really vulnerable with the divergent relative strength. So I mean, I think the risk. Oh, here, I guess I'll pull it up. Since you're not doing the charts, but um, I guess then, the risk is that we are, couldn't break out to the upside. And if we're not going to do that, then we might be carving out a lower high. And the the other thing, Dale, and I know we've said this so many times over the last several months, bear market rallies are very, you know, convincing. And that was a pretty convincing rally off of the lows, right? To a point where how many people were talking about a blow off top? How many people were talking about an acceleration higher? How many people, I mean, this is a very convincing, you take away this and this market right here that we've seen this rally in the last couple of months has been very, very convincing. And to a point where you got a lot of people that are chasing the market up here. So when you ask me how risk is, I think we're walking a real fine line at this point in time. So
Okay.
did you want to add to that?
No, I agree with you. That I think that we're going to see a pretty good correction here, and I don't think we have to make. Yeah, it kind of reminds me of when we got to 6,100 last year, and that was a lot of people's targets, and and that was a measured move on the breakout from 4,800, and then people started raising their targets, and they missed it, and they got caught long if they were waiting for 64. Most of them went to 64 last year. Maybe the same thing here, that everyone's waiting for new highs to sell into the correction. Even Jim thinks it would be more bearish. I mean, there's nothing real bearish about the internals. The AD lines making new highs. A lot of these internal stuff, breadth indicators are pretty good, things above the 50-day moving average. But that, I'm not talking about taking out the April low. but there are some gaps underneath the market that I think could get hit. You know,
You
at
know,
5,700.
one of the things that we should be looking at too is just look at like the underperformance of the Russell 2000 here. I mean, we just hit
Yeah,
the 618 retracement. I mean, that's,
yeah,
you know, you got the S&P that's looking, you know, on the verge
right.
of hitting new all-time highs, where you have the Russell 2000 can't even get back above the 200 DMA and the 618 retracement. I mean, that's pretty ugly. And Chris did talk about this last night. He was like, you know, we got this inverted head and shoulder pattern, but what if we fail here? What if we get back below 2100? That would be ugly. It would be really ugly. And this is, like I said, a very underperforming market. And the mid cap stocks, the Russell 2000, is, you know, the heartbeat of American companies. I mean, it really is, and it really looks like crap. So, or just underperforming, I should say. So yeah, I don't know. The markets are kind of dicey here, and one of the other things that we have to also recognize is, you know, Donald Trump feels emboldened when the markets are at these highs. He can get more aggressive. He can get more, you know, he doesn't have to worry about getting the phone call from all of his, wealthy friends when stocks are sitting at all-time highs. We call it the taco trade, or, you know, Trump always chickens out. I don't think he does. Not when markets are up here. He gets more aggressive when he feels emboldened with the idea that stocks are rallying, quote unquote, because of him. When they're down, yeah, he's gonna probably chicken out. He's probably gonna back away. But this is his barometer of success. I don't care what he says. I honestly don't. So I think that right now he's winning. Down here, he's losing. Up here, he's winning. It's pretty simple. It's not rocket science math that we use with President Trump at this, you know, and his behavior. I think it's very, very I overuse the term, but it is very Pavlovian if you think about it. So anyway, I think it's going to be interesting. You know what else is really interesting? If you guys are in the Forex Analytics chat room, you guys might have noticed that I got closed out of my pound. Well, I closed out of my pound longs this morning. I closed out of my euro. I got limited out last night, and I posted all, you know, obviously the trades when I got in, when I took profits yesterday. And I took the remaining half off, or two-thirds off, for 93 pips. I got hit before, you know, obviously we hit new highs, because I didn't think we were going to reach for new highs ahead of the PPI today. But man, that's a hell of a move. And I gotta ask Ryan, do you think this move was predicated on this euro sterling inverted head and shoulder pattern? If you guys didn't know, whoops, let me get over, not there. Let me get over here. If you guys didn't know that the euro sterling's been in the inverted head and shoulder pattern, then you know, you're not following along via Forex Analytics, because there's the daily chart. We've had it since the breakout 2 days ago. We've pretty much reached for the completion at this point in time. But was it the euro crosses just taking off? Because you got euro sterling, obviously euro Aussie, euro Kiwi. Is this just a euro move? I mean, what predicated this move, Ryan, that got the euro to new all-time highs on the year?
It wasn't an inverse head and shoulders in EURUSD, I can tell you that. But it's,
well, there's some cross. I mean, that's one of the most. It's from what I've read over the years, it is one of the top five, if not, it's like number 3 in liquidity in the FX market. Kman probably know better than me, but from what I've read over the years, it's like top 5. So I mean, when you get like cross rate effects, sometimes it does drag up the base currency, like the euro. So
it was the euro for altogether. Okay, the euro complex, called it that. That's what went on, and there's reasons for that. Yes, you're saying about Trump getting emboldened to talk when the market's at the top or whatever, but he's gone against what Besant was saying. You know, Besant, and he keeps, it's almost shooting himself in the foot. You know, he's got a bit of positivity going in the market. He's got stocks rallying. He's got a deal with China. He's got all the other deals going on. Okay. Why turn around after Besant says, oh, Trump might kick the can on tariffs in July and say, oh, well, yeah, I might do that, but I also might slap tariffs on in a week and a half. Why shoot yourself in the foot that way?
Because you have leverage where the market's up. He can be more aggressive and not worry about it. Or
you can keep your mouth shut and markets will be even higher.
Oh, come on. We know your cut. You know what? When you're in the business as a stockbroker, you know what the #1 rule is? Blake, do you know?
You're
in the business.
Call the East Coast and call the West Coast at the same time and tell them each stock is either bullish or bearish, and then call them back when the stock goes up or down.
I hope that
is that the #1 rule. I mean, that's what guys I knew that did, and I was like, wait, you guys fucking do this? And I was 20-something years old going, what? All right.
Well,
anyway.
yeah, they should have taken your Series 7 away. It's the #1 rule.
Oh, no, I didn't do that.
Yeah, know your customer.
These are the senior guys that I was working with. I'm like, man,
I know.
There's some shady ass people.
Yeah.
Anyway, go ahead.
Anyway,
#1 rule. Tell me.
Know your customer.
Yeah. So we do know Trump. We know Trump, right?
So how's he going to keep his mouth shut, Ryan?
Yeah. No, that's a fair point. But that's the point I'm making. He can't keep his mouth shut.
Yeah.
So if he keeps his mouth shut, we're probably tapping on 6,100. Instead, we're breaking under 6,000. So, but anyway, the point is that he's sown that seed of doubt now and got the market going. Here we go again. So now we've seen US risk off once more, which is sending the euro up. We've also had a market that's already been piling into euros, but it got to the ECB meeting and we got held off a bit because it wanted to make sure that Lagarde doesn't come out and go, whoa, don't be doing too much in the euro or we're gonna step on it. She didn't do that, gave it a green light. She gave it a green light yesterday in some other comments, and the market's gone, okay, so we've got a bit of US risk off. Lagarde's not bothered about us buying euros. Off we go. So we're going to pile in. But also on the other side, we've got some Iran stuff going on too, which is hitting, global risk because that deal is on, off. And we got this summit on Sunday, which may yield a result or not. You got Israel, sitting on the sidelines, watching carefully, saying we're ready to go piling in, whether the US likes it or not. So, and again, geographically, that's another reason why we're going into the euro. So you can't change what the flows are doing, and certainly these are not trends you want to be stepping in front of just yet.
That's right, and I agree, but I also have to reiterate what Dale said. You ask and you're like, why would he do that? Because he is Donald Trump, and he wants to win, and he. This is the thing. He's not gonna back away. What would get him to back away, going back to that original conversation, is if stocks take it on the chin again, I can guarantee you he's gonna taco out. That's it. It's just, or the bond market shivers and shakes, he's gonna chicken out. I mean, that's it all boils down to that. And if you guys haven't figured out his behavior over the last well, I've been watching the guy. I mean, Dale, literally my entire professional career, I've seen that man on CNBC and Bloomberg so many times. I know exactly who he is. And for those of you that don't, and you haven't been for the last 30 years, you are now seeing what he's all about. And it's pretty easy to read. So anyway, that's a whole other subject, but it really factors into the way we tackle these markets. And that's why, Dale, you going back to your original question, when you have the S&P up here, yeah, I mean, it's a risk that he's going to be more aggressive towards China at these levels. He's emboldened. He's emboldened. And when the S&P is back down at 5,000 or 5,500, he will once again say it's probably a great time to buy stocks, and he'll chicken out. Stocks will go up, and he'll come back and say, "I told you so." Just
we had a 1,200 handle rally, just without any of the noise. The market was due for it. It's funny how things come in at the time that a market might be susceptible to what it's going to do anyway, and
Yeah.
turns out not to be the reason, but maybe just a trigger to get momentum shifting. But
Yeah.
it was due for. I mean, we're overdue. I mean, there hasn't been any kind of retracement since the April low.
So, since we only have a few minutes till producer prices, I do think that the PPI data is going to be a mover today because it's going to confirm or deny this euro move. And everyone knows the 116.50 level is a big level for me. I made a big stink about it the last week, and I've blogged about it yesterday, and it goes all the way back here. Ryan, I know you're looking at 117. We got people in our room that are looking at 117.50. And look, I'd rather it be a little toppy up here just because from a selfish point of view, I got limited out of my positions, all my longs last night. So I'd rather that it turn, but it doesn't mean it has to. And today's data, if the PPI comes in weaker than expected, that could be a catalyst that takes us right to 116.50 or maybe 117. It's already weak. The euro's already strong. The dollar's already weak. The euro's already strong. Ryan gave you all the reasons why the euro just continues to rally. And I will reiterate, no one wants to frickin' own the dollar. Why would you want to own the dollar? Not with a Trump with his phone and Truth Social and X. Why would you want to own the dollar? It's too dangerous. So this is a big mass move, and it has been for the last several months of just asset managers trying to get out, and pension funds and insurance companies just trying to get out of the dollar and reduce their holdings. It's a big move, and it's going to continue for a long time. Now we will have levels that you get the dollar bouncing from, but overall, the next few years we're probably going to see the dollar continue to weaken, and just generally speaking, and it looks very weak right now. So
what happens if we get a hot one today?
If we get a hot one today, I think the euro dips right back below 115, and then we'll be buying it again at 113.50. And that's when you get the false breakout. That's why I think it is very pivotal today. If we get a really hot number, we could theoretically dip right back to 115, and then we're going to have to make some decisions from down there. But I think that it's possible, and we can't rule it out. And like I said, in my gut, or not in my gut, in my selfishness, I hope that happens. I hope we get strong data, we get a little false breakout, and we get back to 115, 114 and change, and then we get to make another decision down there. I hope that happens because I want to be buying the euro or selling dollars at lower levels. But hell, I might be chasing it higher in the days ahead. So yeah. So what happens? I don't know. Maybe we get a sizable dip. You get everybody squeezed out, and then you get back to 115. So we'll be watching it here in a couple minutes. Kman, welcome back. Glad you're back from Belgium. Any last minute thoughts before we tackle this data?
No, still the same view. Still not bullish dollars at all. So yeah, I'm looking. If we get a dip towards 115 in the euro, I think it's going to be bought. Same thing for other currencies, but maybe less aggressively than the euro, because the euro is really the currency that stands out for now. I'm a little surprised that with all that geopolitical unrest, gold is not trading higher, so that maybe not the best instrument to express risk unless we start to break back above 3,400.
Yeah, you're right. There's not a lot of attention on gold right now. It seems like it's all on platinum at the moment. Well, right, guys, we got data coming out here in just a minute. Steve, happy birthday. Glad
Thank you, mate.
Hey, and any last minute thoughts before the data comes out? We got 30 seconds.
I agree with your comments. I think the path of least resistance remains lower for the dollar. I'm paying close attention to the crude oil breakout. I think that can end up being very interesting in the days ahead.
Yeah, we rejected the 200 DMA just in case you guys missed it. It did a big rejection of the 200
Yeah,
DMA.
it was also the 78.6. Nevertheless, it has now broken through a very important confluence of resistances. I've been
Data's
showing
out.
that in the morning edge.
Data's out, and it's obviously a little weaker here. Yeah,
PPI is a little bit weaker, yes.
Yep.
A lot
So
weaker.
yeah, and there goes the euro back to new highs.
Initial jobless claims a little bit higher at 248. Continuous jobless claims also climb a little bit higher to 195 from 190 roughly. And that also pushes the 4-week average higher to 240 from 235. So there is a slow grind higher in the jobless claims.
So, I know Ryan doesn't want to worry about the jobless claims, but do you, Ryan?
Nope, not at these numbers, but the market is. I said it on the flow show. I said if we get even something like a 248, 249, market's probably going to spank it. And that PPI data is almost a spit of the CPI data. Year-on-year numbers, headline went up, core came down a pip, but the monthlies missed more, and that's what the market's reacting to.
Got it. You know what's not selling off? This dollar CAD. Just I know Ryan and I've been having a lot of discussions about that this week. This and in the chat room, we are at that key. Just if you guys have missed it, this level for months, and you can actually see all the little. I mean, I had those up there for like I've never removed them. All those little pivots. It's 136.10, big level in the dollar CAD, and even all this weak data hasn't pushed the dollar CAD too much lower than the lows of the session. So really interesting. Dale, you were going to say something?
No.
Oh, I thought you were probably trying to promote your guest.
Oh yeah, Daniel Hussey's here.
He is. Okay. Hey guys, I want to again welcome or say happy birthday, Steve. Happy birthday. Is today the big 4-5?
Yeah.
Woo!
Halfway to
45.
50s.
Half. You've got another at least 65 years to go. So
Kind of
happy
doubt
birthday.
it, but who knows?
Hey, technology today, you never know. It can stretch you out for
I
a
care
good.
more about the quality than the quantity.
All right. Well, as long as you stay in shape, you're going to be good to go. Well, happy birthday. Glad to be celebrating it with you, but not with you, but here with you. Kman, welcome back from Belgium. We're glad to have you back. Ryan, thanks for all the coverage. You have been killing it this week, knocking the cover off the ball in baseball terms is what we would say. And Dale's always thank you for being just our guide every single day, coach. So I'm going to pass it over to you, my friend.
All right, thank you, Blake. Daniel Hussey, welcome back. Thanks, team. I was surprised you're back, K-Man. Good to hear you. Good to hear you, Ryan. Yeah, it feels like Friday to me too, guys. We have one more day, but good job, Dream Team. I don't think anyone really got caught with this weak dollar and was surprised if they've been listening to us here, pounding the table 116, 116.50 in euro. You had many opportunities to buy it for this move. Okay, so I have Daniel Hussey with us. Daniel, wow, huh? What are you thinking today, buddy?
Well, not a lot of thinking actually. I'm trying not to use my brain as much, and there's kind of a joke in that because right, these markets like you can put all this homework in, and then in 10 seconds, 10 seconds later somebody tweets and everything you did is right out the window, right? But jokes aside on that, I think there's an objective way
Sometimes
to
it
look at these
goes.
markets.
Sometimes the I mean, uh, you know, uh, the bearish move in dollar shouldn't have been a surprise to anybody. It's been trending down for a while, no divergences. Now we might be seeing some kind of climax, but haven't any tweets gone your way in the last 4 months?
Yeah, there's been a few instances where you catch you're on the right side of that market. But Not necessarily, right? I haven't been positionally trading some of the markets that I think are really exposed to that, like the
Yeah,
equity indices or the dollar directly. For those that are unaware, I'm a commodities and futures broker. I specialize in on the physical commodity side on actually helping producers hedge their financial risk. Farmers hedging their grain, metal
right.
producers hedging their metal, oil producers hedging their oil, right? And so we look at the dollar as a barometer for our trade expectations and the export numbers that we look at. I think I got my chart up. Can everyone see that?
Don't you think that
Um,
Americans should be hedging their dollars? I mean,
it's
all of their net worth is dollar denominated. So even if they have a, 10% gain in the market, the dollar has declined 10% or more,
absolutely, and
13%.
and that's something that Americans are oftentimes kind of, I don't want to say we're ignorant, but we're not very versed in the idea of currency hedging. Every other nation around the world understands that concept, particularly island nations, right? They understand that their currency is not the dominant world trade currency, and because of that, it is susceptible to trade
Turkey.
imbalances. Turkey's a great example, right? Um, they are have to import certain things. They're forced to import certain things, and then likewise their currency and labor markets are constrained for other reasons, and so they're left with this kind of one-sided trade imbalance. Japan's another good example. A shrinking economy that has a shrinking population that has had to effectively continue to print money, right, to stabilize uh, um, um, their their um, their net inflows for GDP. But ultimately, uh, you know, we forget as Americans that there are one, other countries out there sometimes, and two, there are other currencies out there that are also ample to trade in. And protecting the dollar, Dale, I think is it's a two-way street, right? Do you do that against other currencies? Does an American buy euros? Do we buy yen? Do we buy Australian dollars? Or we buy Swiss francs? That's one way of hedging the dollar, but you're also
You
only
could buy
putting
metals.
absolutely, you're only putting all your eggs back into one basket, which is like,
Yeah,
fiat currency, right?
yeah.
So having real assets is the only true hedge against that basket of currencies. So when we talk about the dollar, it's like there's often a couple conversations to be had. What's the value of the dollar index here versus other currencies, perhaps? And this is many. I know I'm preaching to the choir. Everyone here knows what the dollar index is, but it is at effectively a 5 year um, has broken out of a 5 year or down out of a 5 year cycle that ultimately we should, I think, have stayed above. If the dollar was going to go into a longer term pattern of strengthening, I don't believe we should have fallen back below the 100 figure. And that represents, I've got a big daily chart, a weekly, continuous chart out here. And what I want to point out is these ranges. And every time we come together, we look at these because it's the longer term picture for the dollar. Could you say we're into channel support for the dollar on the weekly chart and the monthly? Sure. But I also am not willing to step in front of a giant weekly downtrend and say the dollar's about to strengthen. But you do have to at least acknowledge the fact that, hey, the market has sold off in the dollar. We broke below key technical levels. We're now kind of flagging and staying below that and putting continued pressure on lows. I mean, this is a downtrend until it's not, unfortunately. And I think that's something you have to realize. So that's the dollar versus other currencies right now, right? And it's being devalued. And that's not a great, sign for the strength of the dollar or what we as Americans, want to think about or see, right? So you could hedge your dollars versus other currencies by buying euros, CAD, Aussie, or selling the Dixie. And you can also hedge your dollars against, real assets like metals. The gold and silver, for example, platinum, palladium, they've really started to take off. Gold is your uh, the big
Kahuna?
brother. Yeah, the big kahuna in that bunch. Platinum, palladium are two that we always want to talk about because they're kind of the up and comers. And the reason I say and kind of leave silver out of this equation is because, well, two reasons. One, the price of silver has just not responded to this rally and gold, platinum, palladium. that we've seen. And two, unfortunately, silver production is just way too heavily supplied. There really aren't shortages of silver. There might be short-term shortages, but we can mine more silver way more readily, easily, and available than gold, platinum, or palladium. And that's a big reason why we're seeing those three metals really take off. And I
keep
believe
reading the narrative as a supply deficit in silver for like months and
yeah,
years.
there is and there isn't. The truth is the silver production, they're just metals in general, there's always going to be some crunch on supply because they're not easy to get just in general. But out of every metal, silver and copper are the easiest to get. Let's put it that way. So they're going to be, when prices rise, they're the metals that ample supplies are going to hit the market before gold, platinum, palladium will, right? There are bigger shortages in those three metals, is I guess the point that I'm trying to make. And palladium and platinum are two that have far stronger industrial uses. I'm not advocating for a long of palladium or platinum just yet, or now, but I am wanted to point out that there's a reason that those two markets are well, at least platinum in this case is holding up far better than silver because of that demand, because of that shortage, and because hey, the market's now starting to look for alternatives to gold, which is what I was trying to bring back full circle here, which is gold's had a great run. I think gold can continue higher, but this is a parabolic move. And any trader worth their salt knows on a long enough time frame, right? There's going to be some nasty pullbacks. Don't get me wrong, there are probably pullbacks to buy, but pull back to 2,600 on gold and still rally all the way to 5,000. That wouldn't be out of the question on a big
I like
monthly,
that
weekly
narrative.
chart.
Yeah.
That's not out of the question. We're still in a bit of a bull flag. Looks like it wants to break out still for another high, as the chart looks and reads right now. But this is a far different looking chart at highs, looking like it wants to break out versus silver, which, yes, it's at a relative high. But when you go back out to that weekly and monthly chart, silver is nowhere near its all-time highs yet. And I do believe that silver, platinum, palladium are looking for their kind of last hurrah move to catch up with gold here. But traditionally, I want to point out that that's also usually the kind of the end for metals. Silver is the fat lady that sings, so to speak. And there's a reason silver prices didn't hang out above $35 to $50 the last time we got up here. It's because there are ample supplies that can come and hit the market once effectively the JP Morgan short gets covered, which that's a whole nother story. The Goldman and JP Morgan roles in the metals. But needless to say, it looks like we're in a period where platinum, palladium, and silver are going to be playing catch up a little bit with gold. But I am cautious to note that we could be coming towards the end, I think, of those cycles. And that's something to kind of pay attention to, folks. That blow off when platinum and silver go, that could be the end when it finally goes.
So I like the divergence we had in corn this week at the
Sure.
430 level on the 4 hour. And on the weekly, if we could close by tomorrow over 436, we'll have a 2-week reversal.
Yeah,
Go ahead.
Uh-huh. No, I was going to say, and today we have a WASD report, the June WASD, which is the World Agricultural Supply and Demand Estimates from the USDA. The USDA once a month gives us a balance sheet update. Because row crops, for those that are unaware, only really come off the field twice a year. In other words, corn, there's a harvest in South America and there's a harvest in North America. Outside of those two harvests, no more corn is produced every year. Same thing with soybeans. So twice a year, we rebalance that balance sheet. And then in between those periods, we get these reports from government agencies that try to tell everybody how the crop's going and what the estimates are. We know how many acres were planted. We literally know how many plants per acre go in. And we can calculate pretty accurately how much yield potential there is for the whole nation. So we know, generally speaking, a good rough guess of, depending on how weather, of course, and other things play out, how much grain can be reabsorbed by the market. But what I wanted, what this report today could show is changes in what some of those expectations are. In other words, how well did plantings go over the last few weeks? How many acres did we get in for corn? And the divergence that Dale's talking about, you can look at December or July corn. They're very similar charts right now. December corn represents corn delivered in December. In other words, after this next harvest. So it represents the price of corn with everything we have left over that's in a silo right now being stored, plus all the new production. So they're saying, corn's gonna be worth 440 right now at that time. Obviously, this is going to change. We're 200 days away. It's got a lot of moves. But the divergence that you're seeing off of the, supportive lows here around 420, 430, in both these charts correlating with that 55-day moving average, a bit of a 50% pullback after, getting a nice kind of bounce off of the lows. And by the way, when we look at a larger weekly continuous chart here for July corn, you can see how we have these big moves higher that correlate with both weather events and global, events that cause, I don't want to say food shortages, but demand for food products or agricultural products, or now, row crops becoming more energy oriented energy product as well. In 2022, the war with Ukraine, Russia, through 2020 through 2021 put a strain on row crops. We also had tight supplies globally. So we're coming out of a period of kind of peak inflation again. We went into this kind of disinflation period, and now we're finding where what we like to refer to as like, where is that commercial demand, right? Where do these commodities, how far down do they go to the point where commercial interests go, no, 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 it's so cheap, I'll buy all of it because this is, there is profit margin to be had with corn at 440, for example. And whether that's feeding it to cows, chicken, or turning it into ethanol for fuel, there's value in corn down at these levels. And that's what we believe we're starting to see around this $4 area. So that divergence you're seeing, that oversold nature in the RSI, price unable to break to new lows with this oversold condition on the weekly, and I believe the daily, if we look at the daily too, yep, there it is.
It was the
See this
4 hour
divergence?
4 hour that gave me the divergence.
Sure. And I'm seeing it. Yeah, and I'm seeing it lots of places here, right?
Yeah,
You got this oversold condition, and it just
that was
cannot
a
keep pushing to
divergence.
new lows.
And
Yep.
let me ask you, Daniel, what is the agricultural community? What are their thoughts? Are they even talking about the fact that a Chinese person was arrested with fungus that could ruin the crops anywhere
Yeah.
planted? I mean, if there's one guy, how do you defend yourself against something like that?
It it doesn't make sense. The motive isn't there. So China doesn't have a vested interest in destroying our crops. They buy all of our crops. They're our biggest customer. Would you go into your grocery store, your local grocery store, the only place you can buy food, or one of two grocery stores in your local area you can buy food, and would you poison all the food? It doesn't make any logical sense. There's no motive there for China to disrupt our agricultural world. That's
Well,
what that's
they've certainly been buying a lot of farmland.
Sure. Yes and
No?
no. That narrative's a little overdone. The amount of farmland
Okay.
China owns is so minuscule that it's not even a drop in the bucket. It's noticeable to the fact that, hey, there's a foreign interest still buying farmland, right? And if we have a problem with China buying a few 100,000 acres of farmland, by the way, we have 96 million acres of corn alone.
Okay.
We're talking they own
Fractions.
less than
Yeah.
1% of 1% of 1%, right?
Okay.
So that being said, not to say that there couldn't be a trend there, that they couldn't all of a sudden just start gobbling up land. I think it's worth a conversation, but they have by no means any economic means to do anything there. If we're worried about that, we should be more worried about what South America's JBS is doing in our cattle and hog markets. We don't have US produced beef anymore. USDA prime is a joke. All of those ideas are a joke. And the reason being is because all of these companies are owned by South American companies. All the meat you buy that, at the grocery store is actually being produced. It may be being produced here in the US, but it's the company that owns it, owns the slaughterhouse, the production that brings it to table is a South American company. So we cry about China owning a few 100,000 acres of farmland when our meat markets are completely controlled by foreign interests. So
I didn't
it's
know
it's
that.
completely hypocritical, and it's an anti-China agenda, which by all means, I think that we need to play the
Change.
trade game, right?
Yeah.
There's definitely some fairness and opportunities to be there, but the motive for China to disrupt our agricultural sector does not make sense. Um, because if they were to poison our crops, the value of our crops are going to go up. It's going to spike prices. In the very short term, it might cause a little scare, helter skelter, a very quick drop in corn or soybeans, but it's going to mean loss of acreage, which means less supply come December and November, which means prices are going to skyrocket. So it doesn't make sense to me that they would come in and cause a bioterrorism event in the United States when they are our biggest customer for this for
Okay.
buying all of those products.
They don't buy more from Brazil than us?
They do buy more from Brazil than us, but they need our crop as well because if they only go to buy from Brazil, they're just going to drive up Brazilian prices, right? So
Got it.
China is actually has better vested interest of pumping money into production elsewhere, getting the rest of the world to produce more crops rather than destroying ours because China is a net importer. They are not food self-sufficient. They need the rest of the world to produce food and energy products for them. So if that's the case, they have a vested interest in trying to develop other countries to serve them those products, and rather than just relying on the US, which for a long time we were the only commodity market China would come and shop at. But now there's Brazil for agriculture products. Now there's the Middle East for oil. So we have competition in these sectors that we need as a country need to realize like they matter. It's part of our GDP. For a long time, we had the petrodollar and global dominance because we've mandated trade in all of these commodities in dollars. That era is over. And we need to, figure that out as a country and kind of catch up to the way the rest of the world trades. Because America for a long time has unfortunately rested on our laurels, and I think really got lazy with our trade, international trade. We kind of just always assumed it would be there. China would always buy our commodities. We'd always buy cheap stuff for them, and obviously we didn't imagine other people getting involved in those equations and changing that game. But that's the
Let,
reality of what's happened.
let me ask you about weather patterns. First I
Hmm.
hear is El Nino, and then there's some other climate pattern that hasn't been seen for a long time.
Sure.
Do climatologists, meteorologists have a handle on this? And so the crops are in the ground. Do we start uh, paying attention to moisture now, Daniel?
Absolutely.
Okay.
Absolutely, we do. Let me, there's actually real quick, we can do a quick 2 minutes on weather. Let me get up my thing. All right. So maximum weather temperature forecast over the next week, we're pushing up into the 90s. It's pretty easy to follow weather in terms of across the country and different patterns. These are all things I look at. Um, at certain levels, right? We look for air movement to bring in, moisture. We're seeing a lot of that still up from the Gulf, right?
Okay.
All of this
Yeah.
this 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 warm, moist air coming up from the Gulf is bringing rain across the Midwest. We watch, daily weather systems as they develop and bring rain, and we know that like basically Iowa, Illinois, Nebraska, like all of our corn is grown right here, guys.
Yeah.
This area of the country is where you watch. So whenever you see weather systems go through here is when you pay attention. You're seeing a lot of, good rainstorms go through
That's
at a
good.
time. Exactly. It's great for producing a crop. But what we see, the result of that is prices that have ultimately, been pretty,
Under pressure a little bit.
pretty well under pressure, right? Every
Yeah.
rally in soybeans and corn has been sold into
But
so far.
the narrative was so negative in grains after the tariffs,
Correct.
and that there's even a farm subsidies in the big beautiful bill. So people are saying, oh, the poor farmers, and uh, we didn't make new lows after that. We were putting in higher lows in a few of them. Beans aren't making new lows. Wheat's probed it. Corn is way above it. So with all the backdrop narratives, bearish narratives, They're acting okay.
Yeah, farming's tough, right? You got to remember input costs have been high. Nitrogen costs, all these other things have been very high too. So prices of corn have come down while input costs have gone up.
What a
Over the same,
squeeze.
right, exactly. It's always a two-way street on this stuff, and that's where risk management like to, kind of preach to the choir of
Yeah.
what the value of what I bring to the table for folks is that we look at that. It's a balance sheet approach. You've got input costs on the low end, and you got sales revenues of your outputs, and you've got weather and other things that affect them in between. 6 to 10 day and 8 to 14 day forecasts, good precipitation outlook with 6 to 10 day and 8 to 14 day forecasts at or above
Okay,
temperatures. It
here
means
we go.
you're getting a lot of good sunlight, good
Yeah.
heat, not too hot. You're also
You-
getting
I
you're
think
getting good weather,
I
good
think
rain.
August is when we have to worry, because I remember being on the floor when we were in the bull market in beans, and that was by the rain breaks. So anytime we had rain during the bull market, beans would sell off. It was a dip to buy.
Yep.
Okay.
And here's something I do to that exact point is I watch this drought map, right? We got Nebraska in a bit of a drought, parts of the US. Good chunk of our corn growing area on the Western Belt here is still actually in moderate to abnormally dry drought conditions with some severe drought through Nebraska, which is kind of normal for Nebraska, if I'm being honest, because it's
Yeah.
all dryland and it's just
Yeah.
more arid climate than Iowa, Illinois. Anyway, long story short is you watch this area and this area that's a problem spot. If you start to see rain come through here, that's going to mean some improvement. And that's where then
Right.
I turn around and watch, okay, we watch the drought map to know where the problems are areas are. You can watch this week over week to see how it changes, but then you also come in here and I like to watch, maybe going back a week or so um of just want a week. Come on. Anyway, you watch these this 24-hour precipitation mapping that you can pull up, and you can see literally well, of course, now it doesn't want to work for me. There we go. We're gonna have a week worth of data up here. You're gonna see across the country, you've got anywhere from 0 to up to 5 inches of rain, and each little weather station will give you its data readout here in a second. Of course, it doesn't work when I want to show you, but the idea is if you overlay right the last week of rain we've gotten with a drought map, you kind of tell where places are getting improvement or not. And so that's how we, pay attention to that weather, Dale, that you were mentioning of trying to determine, okay, hey, if we're in a drought situation over the next few weeks, if we see really dry conditions continuing with no rain in the forecast, well, there's a fundamental story of why weather premium should be baked into corn and
Yeah.
beans and wheat, right? Maybe prices
Baked.
will go up. Baked literally, right?
Yeah.
And then
Yeah.
you know that, hey, the second you see that rain come or it pops up in the forecast, you got to be weary because your narrative might change there. And you can see here over the last week, very little rain out in Nebraska, less than an inch, where all places through, Oklahoma, Missouri, Illinois, we got about 5 inches, solid 5 to 14 inches of rain throughout that the Illinois and mid Mississippi River Basin. But we're going to be watching for some of these areas that over the last week have only gotten 1 to 2 inches of rain. If a week from now they haven't gotten another 1 to 2 inches of rain, you want to see about 1 to 2 inches every week or two for corn and beans to really thrive. And anytime we see that dip in the weather patterns, we know that there's probably going to be some weather premium built in. And so that's fundamentally kind of how we think about the way the market's building in something that's very hard to price. But if
Okay,
there was a way
Daniel.
to look at how it's changing, that's how it's done, folks.
Okay, so Daniel is a futures broker,
Yes.
and so if you're interested in trading futures, give Daniel a call, and you could see he's all over the fundamentals. You know what? After watching your presentation, and what farmers have to go through, I'm so grateful for what they do, but I prefer just, I'm glad that all I have to do is click my mouse to be long
Yeah.
corn.
Right.
Yeah, God, what a life. It's tougher. It's a tougher life than being a trader. And that's
It
not
is
easy
because they have
either.
to be It's funny. I often talk with my farmer clients. They wear many hats, basically three hats. They've got to be an agronomist. They have to know
Yeah.
biology. They got to know how to farm. They've got to be a mechanic because they're working with heavy machinery that breaks down. That is all the time. Combines are complex engineering pieces of equipment. And then they've got to be a financial guru and marketing professional. You can't be all three of those things. You got to hire out. If you're not a
Yeah.
good farmer, you rent out your land. If you're not a good
Yeah.
mechanic, you find the best mechanic. And if you're not good with your finances or that balance sheet approach to managing risk, you work with a risk manager or a broker like myself that can help you with that.
And when prices are good, it's usually you don't have the supply to sell. And
That's
when
right.
the crops are good, you don't get much for your crop.
You're absolutely right. It's a feast and famine lifestyle,
Yeah.
right? You don't have the crop when prices are good, and and when prices are really good, you have too much of it to sell. And so
David
while you're
Fox
worried about,
want yeah, David
Mhm.
Fox wants to know where to follow you, Daniel. We're running low
You can
on
follow me
time.
on Twitter at Daniel Hussey Jr. You can also find me on LinkedIn and Facebook at Dan SOTD Dan SOTD. That's Dan Strategy of the Day. Yeah, dhussey at
Okay.
zaner.com to send me an email. But you'll find me out there, folks. You Google me, I'm out there.
Have a great summer, Daniel.
You too, folks. Have a good one. Thanks, Dale. And until next time.
All right. Daniel Hussey Jr., everybody, futures broker, hedger extraordinaire, helps people manage all the complications with being in the cash grain business, beef business, metals business. That's why the markets were developed, not just for speculation like we use the markets for. And remember, we are too liquidity providers. And with that being said, everyone, don't just count your ears of corn, count your blessings, and see everyone tomorrow. TGIF, you could join the team on the morning edge in 14 minutes. Adios. Thanks again, Daniel. See you guys.